Hi again, this is the Eudower daily chart, and we're looking at 2017. What is important when trading with supply and demands? It's very similar to support and resistance zones. Is just to find those places that have a cluster-like areas, and just to extrapolate, as I've shown in other videos, a rectangle which actually entangles the area of this cluster. And just have a look at this chart of the euro dollar. It's a daily chart, and maybe try to find yourselves a few of those places, a few of those clusters, and maybe a great idea would be just to pause this video before continuing watching the rest of it. So guys, I'm not sure if you have found some, but there is actually plenty of those areas where you can find the price being stuck in a level and forming a supply or demand level. So let's start from the left of the chart, and as we go, I will just mark those areas for you. Okay, so one such area that I'm seeing at the moment is let me just show you what I mean. It's this level here. So I'm taking the highs and the lows of those three candles, and you can see there is it's downtrend, then you have a slight retracement, then you have this cluster that forms here, and then you have a new failed low, which is actually a bear trap, which turns the currency pair, reverses the direction of the euro dollar, and as you can see, it starts going higher. But before you know that, how do you actually mark those zones? And apparently, when you're at this moment of time, you won't be able to see what's happening with the rest of the chart. So you're just trying to react to the price and to the levels that price gives you. And in this particular time, you have this very tight range of probably 150 pips. And so basically I'm looking for any time, because we're still apparently here, we're still in a downtrend, so you don't know that the price will turn its trend and become bullish. But right here you're already thinking of, oh, okay, so maybe I should try to short sell the euro dollar once it reaches this level, and anywhere in this zone actually. And as I have described, apparently this zone is anywhere inside is good, as long as there is a price action confirmation for that. But some areas are actually better than others, and I try to stick to levels that are actually failed breakouts, something like that, like this pin bar here. You can see if you're about to actually project a resistance level, you most likely will go and get those highs here. Just change the cover for you so it's easier to see. And if, let's say, you're looking at the closest resistance area when you're for example looking to for a break, or just sorry, a reversal, then it will be this level. And basically, if you have a breakout through this level, a lot of traders will be thinking of, oh, but maybe that's a great time to start buying, and they will start looking for some price action confirmation or any sort of indicator that confirms the price action. But in my case, if we have a downtrend and then you have a retracement back to a supply level, as the yellow area here indicates, then I'll be looking for a potential break above a resistance level, as the red line indicates, and then a bearish signal. So there are lots of those times when you have a very high risk reward trade which stands just above a resistance level, and lots of people are taking this for a breakout, but it turns out to be a false breakout, or in this case, bull trap, which actually reverses the price. And this is one of the major things of my trading system as well. I'm trying to find not just the supply and demand levels or zones, but also a failed high or a failed low, and a price action candlestick that actually rejects this level, and I'm taking a position in the opposite direction of this breakout. So in this case, if we concentrate on those two candles here, you have a pin bar like inverted hammer, which form just above this red line, the resistance, and then you had a immediately bullish engulfing pattern. So just considering the daily chart, these are already two good signals for a short, and as you can see, price dropped maybe 300 pips, and then it started hesitating. It formed a very tight range, and then it actually retested and opened with a huge gap here. Then it retested this resistance level, which was already an indication that most likely price will continue the uptrend and change the previous downtrend into an uptrend. And what happened here was you had this bullish engulfing pattern here, and straight after that you had all of those buyers rushing in and pushing the price higher. So in a nutshell, when I'm looking to short, let's say, a particular instrument, the first a very important box you need to tick is to have a downtrend. Then the second one is to have a retracement up to a major level, either be it a resistance level or supply zone, and you have a confirmation and a confluence of those two here. And then the third most important thing is to have a price action confirmation as well, as you had some in this case here with the inverted hammer, and then the bearish engulfing pattern that formed the next day. So what makes this place here in the end of March better in terms of taking a short trade than this place here in the beginning of February is that once again I like to see the price forming a failed breakout, then price action confirmation or rejection, that's there is actually a failed breakout, and then a trade in the opposite direction of the breakout.